This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you were here on today. I am Cesar Delgado on Back Roads of Illinois today. We were talking about the fundamentals on the cattle markets with Brad Kooima from Kooima Kooima Evielk Trading. Otherwise, in commodities markets with Brad Huck from Advanced Trading. Otherwise, this week is the Huskers Harvest Days in Grand Island, Nebraska. We have a coverage of that, of course. And the harvest season is upon us and the commodities markets is lower. We were going to hear about the ag barometer from Purdue University on today's market. This has been Back Roads of Illinois.
The index did fall 10 points this month to a reading of 125, so that's down from 135. And as you mentioned, it's the third straight month for a decline in the barometer. Index of future expectations was the driver of the decline this month. It was down 16 points. That puts it at a reading of 123. Current condition index really didn't change. I think it was up 2 points from July to a reading of 129. So the significant change was people becoming less optimistic about the future, and that pulling the barometer back overall.
Farmers are facing some challenges of the farm economy with the commodities markets and the tariffs. Jim Minter from Purdue University. The ag barometer are falling into deeper decline in the markets.
We also take a look at crop producers versus livestock producers. And, if you really drill down on that, it's clear that the optimism in the barometer is really coming primarily from the livestock sector, especially beef cattle producers. A record high profitability for cow-calf operations, very strong profitability for cattle feeders as well. And the negativity is really coming from the crop side.
But not only the commodities markets, especially with corn markets. And the tariffs as opposed to the United States for the soybean demand. You can find more information about the barometer. Go to purdue.edu/C. ME barometer. Thanks for Jesse Allen from American Ag Network of the more than previously years. The fundamentals are volatility for right now with these prices. We were talking about the cattle markets with Brad Kooima from Kooima Kooima Evielk Trading. Otherwise, Brad, how are you?
Hey, Cesar, it's good to be on. I'm doing fine. These are some wild markets that we're dealing with right now.
Brad, how concerned about the cattle markets with these prices for right now? Is there a big swing by the prices?
Well, you got several dynamics here at work, I think, Cesar. The one is clearly record high prices and prices that have exceeded, I think, almost anyone, if they're honest anyways, expectations. Prices that, to give you some perspective, from March of 2020, what we call the COVID low in a lot of the markets, we have basically tripled in value. And that's no small thing. I don't care if you're talking about cattle or if you're cocoa or corn or whatever. I mean, that is a rare feat. So, when you're up in those kind of rarefied prices, you're going to have increased volatility without a doubt. So what happened here, though, the last couple of days here, I think we saw just a little bit of chink in the armor in the cash gap market, Cesar, where cash went, we were 245 2 weeks ago, 243 last week. And then looks like this week we're going to trade lower than, maybe there's a little bit of 237. I think it'll get a little better than that. But the other thing that happened with the cash was that the North is now at, or maybe even slightly less than what the South is, which of course hasn't been that way for over a year. So, in terms of you asked me how concerned I am, I love high prices. The concern I have is when people secure feeder cattle that have such a terribly high break even, that we need to be sure that we're still doing some risk management here. Because from these levels, you need a little bit of a wobble, and things can come down a long ways. The old days, Cesar, you'd get a 12 or 15% break in seasonal prices. Well, 15% of this kind of a price is almost $40 a hundred. So hopefully nothing like that comes by, but she was certainly volatile the last couple of days.
Can you tell our audience about the cash cattle markets? Brad, you mentioned that before we start on.
Absolutely. So I'm in the north. Okay. I'm situated in northwest Iowa. I'm probably in the epicenter of where we do negotiated trade, where we actually, uh, um, show our cattle to multiple different packers, get competitive bids, have true price discovery. Uh, what typically happens in a bull market or a good market is the North is premium the South, and I think some of it's because we work hard at price discovery. Some of it's because the quality of the cattle in the North are better than the South. And sometimes it can be, obviously influenced on how current the farmer feeder up here is. So that's all well and good until now, Cesar, where we have this macro fundamental. And the macro fundamental that I'm talking about is the shortage of cattle in Texas, especially, but generally in the South. And that severe shortage of live cattle has been created because the border with Mexico has been closed. You've had 10 consecutive months of record low placements in Texas because they haven't been able to source that normal Mexican steer or Mexican feeder cattle that they typically would feed down there. So, I think what's going to happen here and start to transition is that the South is probably going to be premium because basically of a supply issue, because the supply is so tight. We are seeing a lot of cattle get exported, Cesar. You're exporting cattle from Kansas to Texas, from Nebraska to Kansas, and then to a certain extent from Iowa, all the way even down to Kansas. So it'll be an interesting dynamic because those numbers say are that tight down there. Also gives me some confidence, I guess, that I don't think that the market's just going to totally collapse here by any means.
Of course, this summer I visited the cattle auction from last month online. However, the prices are high with a couple of heads. It is pretty expensive.
Never, ever been this expensive before. You are 100% right. And you're buying break evens you've never had to purchase cattle that create break evens that high before. But yeah, it's quite a dynamic. You've got the smallest cow herd since 1951 domestically in the U.S. And then you shut down the border where last year we imported over 1.1 million cattle from Mexico, and now we're getting none. So it's a dynamic that has created this very, very, very tight supply. In the feeder market, and then conversely, obviously, also in of course, the fat cattle market. So it's interesting time to be a cattle feeder. The big thing is here, we sure don't need to have any surprises, like a black swan type situation, like we had with the Holcomb fire or with the COVID pandemic or whatever else. So as long as we can keep along without all that stuff, we should have good prices for a while to come here.
The price was 285, I believe. It has been wild.
Yeah, it's like this week it'll calm down a little bit. I did see that one of the southern sale barns quoted their market 8 to 15 lower today, but otherwise it's kind of it's a contest. About every other day, some other sale barn sets a new record high price for a 700 pound steer or an 800 pound steer. But I would say, yesterday we were down the limit, which is $9.25. Today we came back some on the front months, not on the back months of feeder cattle. But I think we might have spooked a few of the buyers into sitting on their hands for a minute and seeing where the dust settles.
How about the cheap grains markets for right now? Really quick, Brad.
For an old guy that's going to watch your program, cheap grain has historically is negative to prices because we have a tendency to feed what we have too long because why not? The feed's cheap anyway, right? And you also have a dynamic of high price feeder cattle also going to maybe potentially contribute to that. So we need to keep an eye on our average weights. They are climbing, and we need to make sure that we don't overdo that so that we lose our leverage in the country.
Sure. What is your final thoughts about the corn markets for fundamentals with these cattle trend?
Well, corn markets. We got a report at the end of the week. I'm out here in corn country. I think that the USDA was quite a ways over their skis last month when they projected that monster record crop, almost 189 bushels. I don't see anything near that. I think that this crop is finished poorly. Disease problems and some areas that didn't get enough rain in the eastern corn belt. So I expect that USDA is slowly going to shrink that production number down because they'll take the yield down. So I think the worst is over. I think the lows are in on the corn, but we still got a big crop out there. It's just maybe not that monster that we thought it was. So it's still going to be a bit of a struggle from here, but hopefully the fall lows came in early, like often big crops do in August. And now we can maybe try to, tie into that great export business that we've had. We've had terrific exports, and without even just China being involved, and maybe that can get us off the lows here. But don't expect anything big. We still have a very big crop.
Do you have any concerns about the consumer budget with the job markets for next few months?
Another good question. We have enjoyed extremely good domestic demand, and for that matter, pretty good foreign demand for beef generally. Okay. Now the dynamic of what some of this wholesale and retail price of beef, the last 4 to 6 weeks has changed dramatically, and it's changed a lot in one particular segment, and that's the grinding meat. In other words, the hamburger. Okay, especially the good hamburger, the 90 and the 93% lean. And some of this has a connection, obviously, to this Brazil tariff. Some of it's because our cow kill is a lot less than the last 2 years. And so I worry a little bit about a budget conscious shopper, which is maybe more that hamburger buyer. I hope we don't take that hamburger to a price where we price him or her out of the market. It's something we need to be watching very carefully. It seems like the middle meat demand up until recently anyway, middle meats, what I mean by that is like the ribeyes, the New York strips, the high price, the steak cuts. That seems to be going just sailing right along yet. So that's the one positive I think, Cesar, that came out of COVID. I think that the whatever this generation is called found out that they could cook a steak at home, and it was really good, maybe even better than you could buy. And you could do it 2 or 3 times a week for the same cost of going out Saturday night just once. So generally demand is good, but let's keep an eye on what that hamburger deal does.
We will be watching for it, Brad. Thanks, Brad. It's football season. I picked the Bears, of course, for this season.
Well, you like the skull chant? Yeah, well, I'm a Vikings fan, you know that, and the story around here is I'm going to hire 6 former Vikings, to be my pallbearers, so they can down one.
The cattle markets is getting ramped up. Meantime, that farmers are watching for the grains markets for the lowest prices for right now. We were talking about it with Brady Huck from Advanced Trading. Hey, Brady, how are you today?
I'm doing good, Caesar. Thanks for having me back on here. It's good to get back together here, but yeah, doing great.
great to have you on again, Brady. Brady, let's discuss about the grains markets, especially with corn markets. However, what is your position on the fundamentals on the grains with cheaper prices?
Yep, grain markets are certainly tough to talk about here, really since midsummer. It feels like farmers have been waiting on a rally, and the opportunity to market at decent prices was very fleeting this year. Didn't last very long in the spring, and certainly wanted some more out of this market on the grain side of things. But nice little recovery since the August WASD lows. Good to see this bounce back. These markets aren't exactly where a lot of people want them, but it is nice to see a little life in the grain markets and a rally in the corn market and soybeans. Where we go next, to me though, we got to get in the field, see where these yields are at. South American weather down there will be a key piece of the grain markets as we start planting down there. Grains need a bullish story to run with. There's a lot of bad news built into this market. We just need a little bullish news to get this market excited again, Caesar.
What is the shorts for the corn on December corn, Brady?
What did you say there, Caesar?
What is the shorts for the corn on December corn, Brady?
Yeah, I think growers are, definitely looking for a little more upside, a little bigger rally. And I don't know, maybe we can get past some of this bad news and get past the production headlines of a big crop. And strong demand is there. So if we continue to see strong demand and then we have a production problem somewhere else, this market maybe gets excited again.
Do you have any advice on the grains with cheaper prices?
Yep. Well, I think, for producers, it comes down to managing cash flow, and certainly it's a tough time in the grain markets right now. So go with what you know, manage cash flow, put your money to work where you know it's going to have an impact, your interest rates, paying down that operating note. And, as always, stay in the game. If basis is telling you to go out there and make some sales, go make some sales, but stay in the game with the call options to keep the futures side open. Just be proactive and don't drag your feet. Sometimes buying a call and losing money on that call option might be the cheapest mistake you made if it resulted in a better than expected, cash sale.
About the management.
Definitely, yes. Continue to options provide you the opportunity to manage those positions and gives you opportunity to manage the market as it moves, manage volatility, embrace volatility. It's not just black and white. The beauty of options is the different strikes you can trade and manage that position up or down depending how the market moves and where it goes.
We know that you were a rancher and farmer in Kansas beforehand to work with the cattle markets for today, but do you have any concerns about these trade for the livestock markets?
Caesar, it has been an exciting week in cattle markets. We saw limit down trade yesterday. It's been a rough week, busy. Cattle markets are moving. Yeah, I'm in the cow calf business myself, and I have a passion for the cattle markets and working with cattle producers, risk management at record prices. If you're selling cattle today, there's only 15 days in history forever that have been a higher value than today's values, in spite of yesterday's limit down close. So we just got to keep the big picture in perspective. Right now, it's good to be a cowboy, but cowboys got to look across the aisle at the grain farmers and know that these market conditions don't always last forever. I'm still optimistic. This market's not going away anytime soon, but we got to keep our eyes on the macro market and outside forces that could end this party before we think it should be over. So good time to be in the cattle business. So
How about the Packers' bids for this week in the North?
yeah, we saw softer bids from the Packer last week. With the board breaking here this week, there's anticipation that it'll probably soften up again here as well. They're looking to kill a little more though, and the cutout has rolled over as two, but the Packer margins are still in the black from our calculations, and they're incentivized to kill some stuff. A lot of dynamics going around as they're running out of cattle in Texas and pulling Kansas cattle down south and Nebraska cattle down into Kansas. Some jockeying around there to keep the kills up and to manage that margin. If that margin evaporates and goes away, you got to watch out on this market. These animals are also really big still. We're looking at record carcass weights out there, near records, if not records. These animals are really big. We're bringing more beef to town on fewer animals. So,
Do you have any final thoughts about the weather situation in the Midwest?
a lot of questions as always on the impact of frost up in the Dakotas and how we finish out this crop. It's still, the August weather, September weather matters. All eyes are going to be on harvest going forward. All eyes are going to be on demand. And we are soon going to be shifting our eyes down south and watching how South America gets along with their planting progress.
Where people can find you for your consulting services for their grain marketing and livestock markets.
Yep, you can shoot me a text or give me a call, 309-664-2346. Brady Huck here in Dodge City. You can find me on Twitter at Brady Huck ATI. Love to visit with you if you are interested in risk management.
Thanks, Brady. I enjoyed our conversation for today.
Same as well. Thank you for having me on, Caesar.
This is Brady Hawk from Advanced Trading One Back Roads of Illinois.